Up next, we have the Netki panel. Up first is Justin Newton, who is the president of Netki. We have with Justin Richard Levine, chair of the FinTech and regulation practice at Polsinelli, followed by Jeff Garzik, CEO and co-founder of Bloq, Chayan Keshari of Cognizant, and our moderator for this panel, David Bailey, CEO of BTC Media.
Hello, everyone. Thank you for joining us. I guess let's jump right into it. Do our esteemed panelists want to introduce themselves very briefly and share with the audience what you do and why you care about digital identity?
Sure. My name is Chayan. I'm a chief architect at Cognizant blockchain practice. For the last 3 years, we have been looking at applications across the different frameworks for all our customers, designing those solutions. The reason that I'm passionate about identity is because one of the factors, it's one of the most important factors for us to look at whenever we're designing solutions on the blockchain framework. So that's why I'm here.
Jeff Garzik, CEO and co-founder of Bloq. Specifically with digital identity, our company does enterprise blockchain. And anytime enterprise is involved, digital identity is involved. And also, as an engineer, I developed an anonymous passport specification that was sort of a core digital identity spec that I'm now evangelizing.
I'm Richard Levine. I'm the chair of the FinTech and regulation practice at Polsinelli. I've been in FinTech for about 20 years and focusing on crypto and blockchain technology for the last 7 years. And I have to admit, I wasn't a Luddite, but I was a bit conservative on the issue of digital identity until I went to a conference in Singapore and spoke on a panel about FinTech and financial inclusion and bringing banking and identity to the unbanked people around the world. And that's when it really hit me, that there is tremendous potential in the technology, maybe not so much in parts of the industrialized world, but in the developing world where people will have access to a cell phone or a smartphone, but they will not have access to a traditional institution where they can establish their identity or get a bank account.
I'm Justin Newton. I'm the founder and CEO at Netki. Netki is a company, we got into the blockchain ecosystem a little more than 4 years ago, and we immediately saw digital identity as one of the key enabling requirements of the ecosystem around things like risk and compliance. And so we've actually focused our company in the space around building tools that can help blockchain companies meet their digital ID requirements around things like KYC, AML, counterterrorism financing, accredited investors, and those kinds of things.
Cool. So let's start super simple. What is digital identity, and where does blockchain come into it? Why are we talking about it at this conference?
So digital identity is can be a very broad topic and can be very context sensitive because what your identity is and what it means can really vary depending on the use case. Or even inside of a use case, identity being used by different people can have different meanings. And what I would use for an example of that is something as simple as a payment, right? Let's say that I want to wire $10,000 to my mother-in-law. Well, from an identity perspective, what I probably care about is that my wife thinks it's my mother-in-law that I'm wiring the money to, but that probably isn't satisfying to a regulator in terms of it. And so that's kind of one example of how identity is context sensitive. In terms of why identity is important to blockchain, there's really 2 reasons around it. The first is identity for blockchain, and which is what we're really focused on at Netki. And what that is blockchain itself, cryptocurrencies, digital assets, tokens, create new requirements and use cases around identity that weren't there before. One example of that is payments have always traditionally been in centralized systems, even digital ones like PayPal. And so you really only needed KYC inside of the walls of one building. Blockchain and decentralized solutions now bring up new requirements because now you have untrusted partners doing the things that only trusted partners did before. So that's something on that side. Now, what does blockchain bring to identity, which is something that a huge number of other companies in the space are working on, companies like Consensus with Uport, like Civic, Sovereign, and a number of others. And what they've really looked at is what can blockchain do to enable identity, and in particular, how can blockchain move identity from the control of large corporations into the hands of the individuals that own it through something called self-sovereign identity?
So I want to get into what are some of those applications that are enabled, but before we get there, walk us through what are some of the mechanics here? How does a digital identity work? How is a digital identity tied to a real-world analog identity? Just explain that from a practical sense.
So what Justin was essentially talking about when you talk about a self-sovereign identity, right? So just looking at, so 3 parts of it. The first part is essentially the claims that you make when you say that, hey, I am who I am, right? So that's essentially one of the big factors. The other aspect of it obviously is who is certifying that I am who I am, right? So that's the other factor, and the third thing is the proofs. So the attestations, the claims, and the proofs which are there. Some of it obviously can be on the blockchain, some of it can be off-chain as well. So those are the 3 intrinsic factors which are important for digital identity to succeed on when we talk about a self-sovereign model. Yeah.
It's also proof of concept. I mean, I remember. I'm a Bank of America customer, and this is not a tout of Bank of America, but I receive an email that they've signed up for Zelle. And I'm thinking, okay, is this a phishing scam that they want me to do it? So what do? And I was thinking, I know about Zelle, and I'm thinking, really? Bank of America on Zelle? And then lo and behold, I log into my phone app, and I find Bank of America's signed up for Zelle. So what do? I decide to try it out, being a good dorky lawyer, and I send $5 to a buddy. And he sends me back a message that says, why did you send me $5? And I said, I was just trying out Zelle. I wanted to see if it works. And then he said, well, please send more with lots of zeros added to pay for my kids going to college. But that was an interesting example because he's my best friend. And he reached out to me through his text message and said, why did you send me $5? So at that point, we had proof that the identity of the person who sent him $5. And once he knew it was me, then he started asking for me to fund his kids' college. So when we look at identity, it's also an issue of trust. Do we know the person we're communicating with? Do we know that we can trust them? Do we know that information we're receiving from them or currency that we're receiving from them is someone that we can trust? Or is it a phishing scam or some type of expedition to pilfer our information? So in a world of people that are disconnected from identity, establishing a mechanism where they have a definitive golden ticket, so to speak, that establishes their identity to deal with other people is very important.
So, talk about, instead of maybe what should be put on chain, is there anything that we know shouldn't be put on chain? Are there things that definitely we do not want to tie to identities for?
Personally identifiable information, the acronym PII. Ultimately, any sensitive personal information, the blockchain is obviously distributed worldwide, public, readable, and so anything that you don't want the entire world to see is not something that belongs on a blockchain. And so we tend to see in the field these hybrid solutions where you have a reference, a hash, or something that links to an identity, but the actual sensitive information itself is off-chain, but it's time-stamped and locked into the blockchain.
But doesn't that only applies if you're talking about a public blockchain? If it's a private blockchain, then you could have more sensitive information on that type of blockchain.
But you're still sharing that information with other parties, right? Which may or may not be the intended recipient for it. So it's technically a good practice for you to have that off-chain.
Agreed.
Yep.
So to narrow digital identities a little bit, specifically to blockchain-enabled digital identities, where are those being used today? Where is it getting traction, if at all? And then what's the potential that you see there? What's getting you excited if it's not there yet?
I'd say the most discrete example is every single Bitcoin transaction, Ethereum transaction, et cetera, is unlocked with a private key. And so that is the first order identity that's on every blockchain. And obviously there's not necessarily any identity information as we might think of it normally attached to that, but that is a first-class blockchain entity, a first-class blockchain identity. My public key is the route by which you can send me funds and the route by which I can unlock funds, prove that I own those funds, and spend those funds elsewhere. And so these digital identities, these pseudonymous identities, are the first-class entities on the blockchain, and those are the ones that control all the money. But obviously, they have none of the regulatory information that we need to check all the regulatory checkboxes. And so that's where we get into, off-chain systems, link systems, hybrid systems.
And that's one of the important factors here as well, right? Because when we are looking at digital identity per se, the purview is a lot more outside of blockchain as well, where there's a lot of value add that you can bring to the unbanked, as we were talking about earlier, right? So there's a lot of those values that can be brought to the table, but setting that up on a blockchain with all the different networks, the public, the private, and all the different kind of networks which are coming up, is a very, very hard aspect and has to be architected for.
Yeah, I mean, people have been talking about putting healthcare records on blockchain.
Scary.
That you could, well, no, but you could create a system where a child born today has every medical exam that they ever go through. They break their leg, they break their wrist, et cetera. Their parents switch jobs, they switch health insurers, they switch hospitals, geographic locations. That child goes on a study abroad at 18, breaks their leg, riding around a bike in Ireland. The parents could authorize a hospital in Ireland to see their entire medical history, including their drugs that they may be taking or any type of treatment they've received for previous injuries or allergies. You could theoretically put a person's entire life history, medical records, on blockchain. Now, if you think about how scary that is, the amount of data that you're capturing, that God forbid a nefarious actor gets their hands on it. So there's tremendous potential, and that, your healthcare records are a form of digital identity. They are who you are. You have even DNA testing now, which is a reflection of your identity. But the question will be, how can we do that in a manner that does not expose a person's most private information to being hacked or being exposed to the world without their permission?
Yeah. I think, if you look at the blockchain-backed decentralized platforms and solutions today, there's some places that they have some incredible strengths. I would say, in particular, the fact that by default blockchains use signatures instead of passwords as a way to log in is a material improvement over how we log in and identify ourselves to most solutions and systems today. In terms of sharing information about social identity, I think that they're very strong today. I think that when you come into some of the use cases around risk and compliance, and particularly in the compliance area, there's still some work to be done because the nature of the way that those systems work at an underlying level is at odds with the way Bank Secrecy Act and other regulation is written. And so there's going to be either some needs to change to policy or changes to system design in order to support that and make that work going forward. In terms of what I'm most excited about, I'm actually really excited about blockchain-based identity for voting in the future. And seeing that starting with maybe lower risk voting like associations, and then moving on to things like shareholder voting, and then up the ranks into governmental level voting. I think that there's some huge advantages there with respect to the trackability, auditability, and trustability of the voting process. Once we can work out some of the issues around getting the privacy of the vote protected as well as the authenticity of it. So that would be an area I'm actually really excited to see what's happening, and something where blockchain-based identity can provide some unique value that the centralized systems can't in terms of the trust of the populace and others.
That's a great application. Does anybody else want to have some future prognosis on how we can leverage these identities? How can we rally the troops in here to be thinking about?
So a couple of areas which are also important. We talked about individual identities per se, and obviously the corporate identities. The other aspect which is also interesting is the identity of the IoT devices which are coming up, right? So they will be interacting pretty soon between each other. There's also an identity about the DAOs that we are setting up, right? So these decentralized identity organizations, right? They would have their own identity as well, because at the end of it, they are an institution that you kind of interact with, right? So that's another area which futuristically that we can potentially look at from a digital identity perspective.
I think preventing social security fraud which is a huge problem. I think digital identity would have tremendous potential there. And then also tax fraud. We're now getting to a point where the largest percentage of the US population, the baby boomers, are starting to retire. They are generally, elderly people are the targets of these types of fraud. If we can create a system where electronic payments are the mechanism for transmission rather than checks, which are being swiped out of people's mailboxes, I think there could be tremendous benefit for people who are receiving Social Security and tax refunds, and also for the economy, for the government, reducing the amount of fraud in this area.
And direct benefit transfer is a great area that a lot of organizations are currently looking at, and identity plays a great role there as well.
Yeah, and I would echo Chayan on what we call the machine web, is that IoT devices, non-IoT devices, ultimately these are, with blockchain, they're first-class entities that can spend, which is a new, with blockchain, sort of concept, is you can have an autonomous entity that's a computer that's making economic decisions, transferring assets based on particular rule sets. And so that's new, very exciting. I'm a big proponent of autonomous systems. My co-founder, Matt, earlier talked about Metronome, which is an autonomous system we're launching. And those all need identities, just like humans need identity. So, point one, machine web. Point two, also covered by Mr. Rozak earlier, was self-sovereign identity. This is just such a powerful concept that we are taking back control of our own personal data and our own personal identity. You look at Google, you look at Facebook, they're vacuuming up our personal data and making money off of it. And with self-sovereign passports, self-sovereign identity, self-sovereign data protection, that puts me back in the driver's seat after decades of having the tech giants in the driver's seat for personal data.
That's a great point. Yeah. And I think,
yeah.
Bravo. Going one step further, we're now getting to the point where people will be able to monetize their own data.
Yep.
So rather than surrendering your data to entities that are vacuuming it up, as you indicated, big data businesses, you will be able to say, okay, you want to use my data, pay me for it. It's very similar to, for decades, the stock exchanges vacuumed up the quotes, the trading indications of trading firms. And starting in the early 2000s, the trading firms said, wait a minute, you're monetizing my data, selling it to Bloomberg and Thomson Reuters, and making me pay for it to trade on your market. You need to pay me for it. So I do think in the future we will see that digital identities will enable consumers to not just have control, but to be compensated for the data that they allow these big data businesses to use.
Absolutely.
Data as currency is what you're talking about, right? Yep, absolutely.
So these all sound like an amazing vision that everyone could get behind. Why are we not there already? What's restricting this vision from happening?
Well, there are essentially 2 or 3 big challenges that I see, right? The first one is essentially around regulations. The second one that I see is mostly around infrastructure, right? If I walked into a DMV office today, I can't show them my digital identity, can I? So that is itself a big challenge for the adoption portion of it. And then the third aspect is obviously the standards. There's a lot of work that is happening there with the standards per se. But these 3 are essentially, and the third one essentially is, I think, the biggest one that we need to focus on. And government has to be basically behind that for us to be able to use digital identity on blockchain in the way that we choose to.
And I would say that what I call the identity chain is a challenge in that we have on-ramps that are KYC, AML checked, accredited investor checks, et cetera. We have off-ramps with those same checks. But in the middle, I can transfer these tokens to Osama bin Laden, and they can transfer them back to an accredited investor, and then he can liquidate very legally. And so we have this break in that the KYC chain, the accredited investor chain, and that's endemic to blockchain. That's how blockchain functions today. And that's something that I think, with 2018 being the year of the security token, the year of securities, that is something that's, I think, going to receive a lot of attention.
So we're going to come back to that question, because that's I think a very timely issue to discuss. But I want to go through kind of what other restrictions lay out there before we do that.
You know, when I joined my firm 2 years ago, I asked that the practice be named the FinTech and regulation practice. And that was intentional because people in this space forget that regulation matters. I always tell my clients, there's a song by The Clash, the lyric is, I fought the law and the law won. You fight the SEC, you fight the CFTC, the Department of the Treasury, FinCEN, you will lose. You can try, but they have the considerable resources of the government behind them. And they also, people get angry and they say, oh, the regulators didn't tell me what to do. That's not true. They publish speeches, they publish comments, they publish alerts, they publish enforcement actions, propose rules. You just have to read and you have to listen. And if you don't, then you have no one to blame but yourself when you get sued. But in any of the areas that we've been talking about, whether it's medical records, you have HIPAA. Whether it's securities tokens or tokens, you have the SEC or you have the CFTC. Okay. You have these agencies that you have to have a dialogue with. And I always counsel my clients to be, like in the old Westerns, the guys in the white hats. Go in and have a dialogue with the regulator. It's much better to have a dialogue with them at the beginning before you spend tens or hundreds of millions of dollars building a business and have them shut it down than if you wait down the road and they sue you and then you have to give all the money back to everybody you raised it from. So I think that as we look at this, people should be keeping in mind that these are all great ideas, but you always have to think about the regulatory side of what you're doing.
So before Justin answers a quick follow-up to that, take Justin's idea of a future where our voting system is, all on the blockchain. We're not having to trust the government to provide that service to us. For those types of solutions, what's the mechanisms by which you work with, who do you go see to say, hey, America, we need to upgrade our voting system?
Well, it depends. I mean, voting systems are run at the state level in many respects. So I have a client that's working with the city of Boise, Idaho, and putting all their records on blockchain. That's a wonderful experiment. And when we talk about digital identity, I get pulled over for speeding periodically. I pull out my phone and I show my insurance card on my phone to law enforcement. Now, he could take my phone and try to troll it and look at everything. But the point is, we are getting to a world now where information is available on electronic mechanisms where you don't have to pull out a card. You don't have to pull out an insurance card or a driver's license. And I think that in many respects, you're going to be looking at talking to your states and saying, okay, we want to put voting on blockchain so that we have an entire audit trail of every vote by every person in every election so that we know that it hasn't been someone hacking into the system trying to manipulate the vote. But it's going to be a dialogue with both state and federal regulators, I think.
Incremental execution.
Incremental, yes.
Yeah, improve things as you go. I mean, look, I think the other folks on the panel hit the topics fairly well, so I don't need to go into it in a lot of detail. But I think one of the things is identity is very big, and you're not going to change the way that the world uses identity in 2 years. You're going to change that generationally. Use of the internet was a generational thing. Pervasive use of mobile phones and smartphones was a generational thing. And changes in the way that we use and share identity is going to be a generational thing, which is why it's important in the meantime that we continue to develop these technologies that bridge the gap and allow us to use analog identity trappings and documentation and information to pull into the digital world, as well as finding more ways to pull digital attestations into the physical world. And so, that's work that's going to be generational, literally. And the hardest problems to solve in any digital ecosystem are the boundary between the digital and physical world. And that's for a couple of reasons. One is the physical world is more imperfect, and the digital world doesn't like that. And so you need to figure out how to make imperfect things perfect enough that digital likes it. And then the second thing is anytime you're operating on the border of the physical and digital world, there's usually people involved. And people are frequently very good at finding ways to do things that you didn't expect them to do. When you were putting together the process and plan you anticipated that they were going to go through. And so, we believe, and we've really focused on trying to link those things together because of the fact that this isn't an overnight transition. It can't be.
Yeah, and one of the interesting points there is what is happening with the data laws, especially around right to forget, right? That's a very important factor. All of us know blockchain is immutable, right? So if I want to say that I don't want my data to be there on the system anymore, how do we handle that? So those are important aspects, as I said, that needs to be architected for, and that's where the physical and the digital world has to meet together to make sure that some of those aspects of the physical world are also catered for in the digital world as well.
And I think just to echo Justin, it's very generational. When you talk about, say, the DMV accepting my digital identity, these large organizations, institutions, they have institutional memory. They take decades to change in and of themselves. Yeah. And so I think that it's going to be a generational time frame for authorities to get comfortable with not just blockchain in general, but I'm attesting my governmental authority on this particular digital medium. That's a trust barrier that yep. authority has to cross.
But we have to remember, I mean, when I started in the business in 1999, stocks were traded in fractions. People used to yell at each other on the floor, and people didn't have online brokerage accounts. E-Trade advertised with chimpanzees to try and make people believe how easy it was to have your own brokerage account. The traditional incumbents said, God forbid, you need to pay $100 a trade and you need a broker doing your trades. Within a couple of years, that was no longer the case. All the big banks had online brokerage. The smartphone, it's 10 years old. Okay? Technology, the adoption of technology, even among, God forbid, those of us that are closing in on 50 or older, is not as slow as people think. You just have to walk down a city street today, and we've become a society that no longer look each other in the eyes because we're all too busy looking at our smartphones. So I do think we will see an acceleration of adoption of digital identity technology and blockchain technology over the next 10 years.
So we've already started talking about regulations, but what, in an abstract way, what role is government playing in identity today? And is that the optimal participation that they should have? Like, what advice would you give to a regulator in the room who's trying to learn and make their systems better about what their role is in that marketplace?
So we've seen different roles in different marketplaces. So, for example, over in Dubai and now the UAE, they have put out a contract for a local firm to build them out a national digital identity platform that is blockchain backed. And my understanding is there's other nations that are doing similar things at the national level. I think, I don't know, I remember here in the US about 15 years ago, things like springing up here and there about the idea of like a national ID card. It became a freedom-related issue of, the government is going to track us and know who all of us are, and that won't be okay. And so I think culturally that would be a very difficult, much more difficult discussion to have here in the US, where there is less comfort with that level of central control over something like identity. I think that if I was a regulator or a legislator, what I would be doing is I would be looking at these new forms of digital identity and I would be examining them to find out what new opportunities do they create. So for example, like a web of trust self-sovereign identity, where your peers vouch for who you are, may provide some benefit for banking the unbanked or undocumented, where you can bring people onto a low-risk account with something like that. And so there's an opportunity for an identity technology to enable a community that otherwise couldn't be enabled. We should look at what risks these new forms of digital identity potentially raise so that we can appropriately control for them. For example, because they are highly portable, how do we make sure that they're not stolen or moved around the way that other identity kits are moved? Private keys are a big help, but not perfect. And those kinds of things.
I think it's funny, you go to the airport now and everybody says, oh, I'm worried about privacy. But then you ask people, how many of you are on Facebook? 20 years ago, if I had said you join a system where you put photos of your children and your family and your spouse and where you're traveling and where you had dinner and what you're doing and your political views, people would have said, oh my God, that's ridiculous. You're violating my privacy. We now do it voluntarily. We go to the airport. Those of us who don't want to wait in line sign up for TSA, free. We give up some of our data to do that. Those of us that are really aggressive sign up for Clear, where they take our retinal scan and our fingerprints so that we can get through even faster. So we live in a world where now people are choosing to surrender privacy and their identity in order for expediency or ease of life. And I think that's healthy. Being a good libertarian, it's a choice people make. And if you choose to surrender some of your data, and what we were talking about earlier, if you own your data, then you can make that choice and maybe even get paid for it. So as we look at digital identity, I think, and we deal with regulators, we should ask them, how do you incent people to make an informed decision about surrendering their identity or their information, so that they're not just doing it at someone else's instruction, but they're doing it because they've made an informed choice to do it.
And are there any existing regulations out there as they relate to identity that if I'm an entrepreneur in the room and I'm trying to build a project that I need to be keenly aware of to stay out of trouble?
There's a bunch. So I mean, if you're doing anything that's related to a token that has value, obviously KYC and AML is going to be a huge portion of it. There's European privacy regulations around GDPR that specify liability if you let people's personal data get stolen or exposed. And there's other privacy regulations in other areas. There's safe harbor regulations with the EU if you're going to store the PII of EU residents outside of the EU physically. There's certain exemptions that you need to request and get from the EU in order to do so. I couldn't list all of the regional regulations that have to do with particularly privacy and identity. And then, when you get into the KYC portion, which is the other side, so privacy is the piece, what we have to hide, and that's one side of identity. The other is what do we have to know. And KYC requirements also vary by jurisdiction and can vary by use case. And even inside of a use case can vary based on the risk of the activity or the type of clients that you're taking on. And so, the thing that I would encourage any entrepreneur that thinks that they're going to get anywhere near identity to do, they should assume that it's a big project. And so if it's something that they're going to take on themselves, they should plan for it to be a significant part of their project planning cycle. And the other thing I would really highly encourage is, particularly if you may have compliance-related requirements, please do not wait till the last second. We have on occasion had a customer come to us and say we need to be live in 48 hours. And that's not a comfortable position for anybody. And because you're operating, in that combination of where the physical and digital world interact with each other, the place where that's going to cause problems if you have to rush is your user experience. So you're going to end up causing a worse experience for your user than you could have, because you're going to have just more cruft that you weren't able to sort out by being ahead of the game, being able to do more proper planning and create a process that really flows well together. So I would just say, what I would tell any entrepreneur in the room is it's more complicated than you think, and please start thinking about it early. Otherwise, it's going to cause you pain that you don't need to have.
Or more generally, I would say, for any entrepreneur in this space, have an attorney review your business plan, review your product, understand what regulatory categories that you either might trip over, you want to avoid. That is so critical for every business in this space.
I didn't pay Jeff to say that, but there will be drinks later. One thing to keep in mind also, it's not just about your business. You are going to get hit with a subpoena or a request for information from one or more government agencies at the state or federal level. And sometimes they're going to ask you to disclose information about foreign nationals that you may not be able to disclose without violating foreign data privacy laws. And it's going to put you in a very uncomfortable position where you have to go to a US regulator and say, we'd like to cooperate, but we can't. You need to go to a foreign government and get an order compelling our foreign affiliate to produce data, and then we will cooperate. That's not a fun place to be in, and you better have your ducks in a row. Because if you don't, the government can take action against you. They can go to a court. They can compel production. So it's not just about being able to take care of your clients and screen them. It's also about you may get requests for information that even implicate national security. And you need to think very long and hard about how are we going to respond to that. And it's not appropriate to do it at the moment in time that you get the request.
So I want to switch gears here a little bit for the last question, and Jeff touched on it earlier. But there's a lot of excitement around the tokenization of real-world assets. And there's been some high-profile projects that have launched platforms to help just traditional businesses tokenize their equity. And there are certain identity requirements that are being placed on that. And it seems like, to me, as I'm a Bitcoin person, so I have a different frame of reference than most, but that there's some incompatibility in terms of what regulators are asking for and what's actually possible from a technology perspective. It's like, oh yeah, we love permissionless systems as long as you permission it in this way and that way. So, explain kind of, is there a way to make the existing framework viable, or should we be challenging regulators that they need to approach this problem differently? Because, exactly what Jeff said, if a company is responsible for the tracking the identities in the secondary market, ooh, man, like that, I don't know why you would need a blockchain to be able to accomplish that, how you could use a blockchain to accomplish it. So talk about this. Like, what's the solution to the chain of custody problem in the context of tracking the ownership of an asset that's a real-world asset?
Well, obviously blockchain is essentially a chain, a digital chain of signatures, et cetera. And so you can, from a technological perspective, track A to B to C to D, assuming that you have the correct signatures, et cetera. But this is, again, sort of where the humans meet the machine world is, as I understand it, even completely outside of blockchain, who owns what stock certificate physically, even with the DTCC and all the other people involved, that's still a chaotic process. That's not a completely closed loop. You still have more proxy votes in a corporate action than you have shareholders on occasion. And so there is, I think, room for blockchain to improve that and make that more secure. And the technology aspect of digital chains of signatures, chains of blocks, et cetera, that is all present. But it's, again, a matter of getting the humans, the human systems, the layers above to agree and to trust all those chains, to generate all those chains, validate that. And both inside and outside of blockchain, we're still far away from that, I think. I think there's an open question as to, is there a solution?
Yeah, so I'm not a compliance lawyer, so I'm going to avoid getting anywhere near some of the details of this. But we have worked on a number of projects that have taken a view from the start of saying we are building a blockchain and token-based solution, and we are building a platform that is going to meet regulator compliance requirements, whether those be overseas requirements if they're based in Hong Kong, Singapore, or other places, or SEC reg requirements in the cases that they're doing security tokens here, or others. And formulating their compliance architecture is part of the upfront process, just like formulating the rest of their architecture. And so, when they're designing and building their platform, ensuring that the controls that are appropriate for the activity that's occurring on the platform is just part of the design. And most of that isn't taken care of at the blockchain level. The blockchain itself is still fairly simple, uses traditional permissioning mechanisms like signatures and others, but the information that's required to be collected, exchanged, shared, or stored around identity or other compliance data is all done at the application level, peer-to-peer between the people that are transacting or interacting on the network. And so, either they themselves or a cosigner are able to validate that those compliance pieces have been completed. and only after I agree that my compliance requirements have been met would I sign a transaction that goes onto the network. And so the blockchain doesn't provide enforcement. It does provide tracking, because now the issuer of the token can watch the blockchain for anomalous looking activity. Like if suddenly there's an address that looks like it's acting as an illegal gateway because it's having weird activity or other things like that. So you can use the blockchain as a way for activity tracking, anomalous behavior tracking, and others, but that compliance data won't necessarily go or be shared on chain.
I would say get a good lawyer, have a
Yep.
dialogue with your regulators,
Yep.
and think about if you can build into the blockchain mechanisms to prevent what the regulators are concerned about. One of the best examples is if you're selling private company shares, those shares are restricted for 12 months. You could build into the blockchain a date recognition that says the shares were purchased on March 8, 2018. They cannot be sold for 365 days. And if somebody tries to do a transaction, it would reject. So you can try to build into your technology some of the mechanisms to comply with the law.
So, when you think about purchasing gold from a gold store, there's regulations that they're applying on the issuance when they sell you the gold. And then when you come and sell the gold back to them on the redemption, you could say there's also regulations that they're applying. But that secondary market is outside of the purview of that entity. It seems very challenging if the secondary market, if you're responsible for the secondary market, that would mean that a project that does a token sale in, say, another jurisdiction is now implicitly under U.S. securities regulations, because in theory, a U.S. investor on the secondary market can acquire their token. So am I thinking about this wrong, or is there just a conflict there?
So, I think that's an important point that we actually didn't touch on here that was part of your original question, which is, you said, should you work to comply with the regulations as they stand, or should you be out lobbying the regulator? And the answer to that is yes. You should be doing both, right? Obviously, new technology creates new risks and new opportunities. And so there's opportunities to work with the regulator to evaluate the technology and figure out what framework is right for that. In the meantime, however, the old frameworks are going to continue to apply and be applied to your business, whether you want them to be or not. I think that the statements by FinCEN, I think the actions by the SEC and the research the SEC is doing now with contacting companies make it, pretty clear that regulators believe that the existing regulations apply to your token business. But in the meantime, let's create change. That's what the Digital Chamber is for, is to help us create that change in the world that we need to help both enable blockchain, but also create the amazing opportunities that this technology can help us to unleash.
Absolutely. All right, well, we're going to end on that note. Well said. Thank you, everyone. Hope you enjoyed the panel, and see you at the cocktail.
Thanks.